What if I told you there's a book that changed Warren Buffett's life forever? In the world of investing, there are few names as revered as Warren Buffett. But behind his success lies a beacon of knowledge that has influenced countless investors. A book titled The Intelligent Investor by Benjamin Graham. This book isn't just a guide to investing, it's a treasure chest filled with timeless wisdom. Why is this book so pivotal in Buffett's journey? Let's dive into the 5 powerful lessons he learned from it and how they can reshape your investing mindset too. The first lesson is about the importance of value investing. Buffett learned from Graham that the stock market is not just a place to trade shares, but a platform to buy pieces of businesses. Instead of chasing after trends or fads, he focuses on the intrinsic value of a company. This means looking beyond the price tag and understanding what a business is worth based on its earnings, assets, and overall performance. Imagine walking into a store that sells 2 identical items. One is marked at $20 and the other is on sale for $10. Your instinct tells you to grab the second one, right? Buffett applies this same logic to stocks. He seeks out undervalued companies, often referred to as the ones everyone overlooked. He opts for businesses that demonstrate solid fundamentals and strong management. Lesson 2 is all about the power of patience. In today's fast-paced society, we often seek immediate gratification. But Buffett stresses the importance of a long-term perspective. The stock market can be unpredictable, rife with short-term noise and volatility. However, history shows that great companies tend to provide significant returns over time. Warren famously said, "Our favorite holding period is forever." This mantra encourages investors to hold onto quality shares instead of selling off at the first sign of trouble. Think of investing like planting a tree. It doesn't grow overnight. It takes time, care, and a lot of waiting. This mindset fosters resilience during market downturns and teaches the importance of waiting for the right opportunities to arise. Now, let's explore the third lesson, margin of safety. Buffett learned from Graham that every investment should come with a safeguard. This means buying stocks at prices significantly lower than their intrinsic value. A margin of safety acts as a buffer against errors in analysis or unforeseen market shifts. Let me give you an example. Picture yourself buying a house for $100,000, but you perceive it's actually worth $120,000. That $20,000 gap is your margin of safety. It protects your investment in case the market fluctuates or things don't go as planned. Buffett carefully assesses the risk involved in his investments to ensure he has this cushion. So, be it stocks or any assets, always reason through the potential outcomes and don't forget about your safety net. Lesson 4 digs into the concept of emotional discipline. Investing can be an emotional roller coaster. Market fluctuations can create waves of uncertainty, fear, and greed. Therefore, maintaining a level-headed approach is vital. Buffett emphasizes the need to think rationally rather than emotionally. Often, the best investment decisions are made when you're able to detach yourself from the market noise. Imagine standing on a beach during high tide, where the waves are wild and chaotic. If you let those waves dictate your movements, you'll get swept away. But if you step back and see the shore, you gain a broader perspective. The same applies to investing. Staying calm amidst chaos allows you to seize opportunities that others might overlook. Finally, Lesson 5 is about continuous learning. One of Buffett's most powerful traits is his insatiable curiosity. He dedicates hours to reading and studying various reports, articles, and books. Knowledge is power in the investing world, and staying updated is essential. Warren often shares that he spends about 80% of his day reading. In the world where information flows like a river, the knowledge you acquire can form the bedrock of successful investing. It arms you with tools to navigate the market landscape. Think of it as sharpening your axe before you start chopping wood. The more equipped you are with information, the more efficient you become in making decisions. It's not just about acting upon knowledge, but continually seeking to expand your understanding. In summary, Warren Buffett's guidance from The Intelligent Investor is as relevant today as it was decades ago. Value investing, patience, margin of safety, emotional discipline, and the quest for knowledge are not merely principles. They're a way of life for anyone who wishes to succeed in investing. As we wrap up, remember that adapting these lessons isn't just about seeking wealth. It's about building a solid foundation for financial freedom. So, what part of this journey resonated most with you? I invite you to explore these lessons, because, in the grand scheme of life, the true reward lies not just in profits, but in understanding. What investment lesson will you apply this week? Let us know in the comments below, and subscribe for more insightful stories.